Hello everyone. Today we're going to look at how Egypt managed to transform its situation that was becoming more than problematic, and how in the space of a few weeks more than $50 billion have been released to support the country's economic and financial crisis. But before to look into this help, it's fair to start by saying that Egypt did its bit with some historic decisions on March 6. So a surprise 600 basis points increase in interest rates to 27.25, followed by a devaluation of the Egyptian pound from roughly 30 to 50, which is almost 40%, and the decision to adopt a flexible exchange rate regime, as the IMF had been demanding for several quarters. So by going beyond expectations with these measures, Egypt obtained a doubling of its program with the IMF to $8 billion. Shortly before that, at the end of February, Egypt signed a historic agreement with the UAE, a $35 billion investment by the Abu Dhabi Sovereign Wealth Fund in a coastal development project. This is enough to replenish Egypt's cash-strapped foreign currency coffers. But that's not all. There's also a $20 billion package that has been announced. So the IMF is included in this, but there's also the European Union, the UK, Japan, the World Bank. And we also hear that Saudi Arabia is in talks to invest in Egypt. In a rare move, Moody's has revised the country's outlook from negative to positive without going to neutral. If we look at a bit back, Egypt had been hit hard by COVID, and its foreign currency inflows from both tourism and traffic through the Suez Canal had dried up. Tourism picked up again in 2023, almost 15 million visitors, which is a record since 2011. Since then, the trend has slowed with the instability in the region. There also has been a decline in traffic through the Suez Canal and a rise in the price of oil and grain, which Egypt imports. So a drop in foreign currency inflows and soaring inflation, it reached over than 35% in February, have further complicated the situation. But over the past 2 weeks, the dramatic trajectory of the country has been reversed. Egypt risk premium has fallen from 10.5 at the end of January to 5.5 at the beginning of March. The return on Egyptian debt in 2024 is close to 20%. Private remittances from the Emirates to Egypt are starting to pick up, and the country is aiming to rejoin the JP Morgan Emerging Market Indices, from which it was removed at the end of this January due to the foreign currency liquidity crisis. Since the devaluation, the Egyptian pound has also started to move towards the parallel exchange rate. So, can we say that Egypt is now out of the woods? Well, apart from the need to repay these loans, inflation will be a test. Since the beginning of 2022, it has exceeded the central bank upper target of 9%, despite 19% hikes in interest rates. So, while Egypt has undoubtedly got out of a rut, many challenges remain, such as controlling inflation, truly floating the exchange rate, making progress on privatization, slowing down infrastructure projects, and starting a real fiscal consolidation. What can we say about this story is that the too big to fail applies not only to systemic banks, but also to geopolitics, and Egypt is a case in point. Thank you.